Hi, and welcome. My name is Keith Halls, and I'd like to welcome you back to the weekly 10-minute CFO call. How do you know if this call is for you? Well, it's easy. If you are a CFO, this call's for you. If you're a CFO and you're trying to stay abreast of what's going on in the industry, this is a place you need to be. If you're a small business owner and you're trying to better understand the accounting and finance department and what all those reports mean and everything like that, this is the place to be. Why? Because each week we touch on a subject that affects CFOs, affects accounting, finance, affects the whole company. And then what I do is I have a conversation with one of our fractional CFOs. Today, we have a returning guest with us, Mr. Jared Miller. Jared, how are you today?
Doing well. Thanks, Keith. How are you doing?
Doing well. As I've said before, I've had the privilege of working with Jared for some time now, and it's a lot of fun to be able to watch him work. Incredibly intelligent, and he's got a team around him of good, strong people, and they're doing a lot of work for a lot of people. Now, today, Jared, what, as you know, we're going to be talking a little bit about is managing finances of multiple companies and or a family office or anything like that. And when I start thinking about that, I think, you know what? A couple of things pop to my mind because that can be hard. If you have multiple offices, then you're talking about possibly consolidated financial statements. If you have multiple offices, maybe one office needs cash, the other office doesn't. And how do you fund everything? I mean, lots of different issues, but I'm not the expert. Jared is. So, Jared, with that, first of all, what are some of the unique challenges that you face in regards to this multiple offices like that?
Yeah, one of the challenges that we face is the need for consolidation and separate financials all at the same time. First, each company is an individual operating business unit, or oftentimes it is. And so we need to be able to look at the health of a company on the individual level, but then we also need to be able to, as a CFO and a business owner, we'll need to look at the consolidation because you want to know how you want to be able to look at it more granularly on the business unit level, but then also collectively. Because, like you said, depending on what the business unit is doing, you might need to infuse cash. You might be doing better here or there. So it's good to look at the individual level because they're separate entities. They operate differently. But then you want to know the health of just your overall portfolio or what you're owning as a consolidation. But it's a challenge to know when to look where. Do I look at the consolidated? Do I look at the individual? And the answer is you got to look at both.
That is a hard question, and you're right. It's hard to know, but you're right. They do need to look at both. Are there any software, tech, anything like that that you've used that you would recommend or you like, or anything like that to help with consolidations and everything?
Yeah, one of the software that we utilize is called Reach Reporting. They're a great tool because it allows us to input GLs from different entities and consolidate into one. And then also we're able to utilize eliminations. We're also able to bring in Excel documents or Google Sheet documents if you have some stuff that are kind of outside of the GL. And it allows us to be able to get that consolidated look. But then also because you're able to pull in GL data from multiple entities, right there also in rich reporting you're able to look at them on an individual level as well, which is helpful because then you don't have to keep going into different entities on their GLs and going back and forth. It's a nice location. It's a nice tool to utilize to have all the numbers you need in one location so that you can make faster informed decisions instead of spending hours trying to do it on an Excel document. I mean, and it can be done in Excel. It's just not advisable because things happen.
Exactly. And the elimination entries can be complicated, and you said that Reach can help you with that.
Yes, that is correct. So Reach will help you with the elimination. So you can kind of like take your P&L, you can take a consolidated P&L, then you can add a column for eliminations, and then you can do it post elimination so you have a better idea. Because a lot of times there will be intercompanies, and a lot of these, when you have multiple business units, there's a lot of intercompany transactions and relationships that you want to eliminate on the consolidated level so that you get a real accurate picture of what's happening.
Very good. Do you have an example that you can give us of maybe a company that you don't have to name, of course, but a company you've worked with that has multiple that you've been able to help with cash flow or consolidations or anything like that? Do you have an example you can share with us?
Yeah, so I have a client, a family office, and they have several business units and holding companies and investments all over the place, which is awesome. I mean, it's nice that they have such a breadth of a portfolio and large, but sometimes it gets complicated knowing where things are going because sometimes what happens with business owners and when they own multiple companies, they don't foresee the need to keep things separate. And so sometimes there's a little bit of commingling of funds or expenses and stuff. And so as a CFO and in accounting, one of the things that we need to do is help them understand the need for that and then also work within their means because you also don't want to encumber the business owner to do what they're used to doing. And so sometimes we just have to kind of work with what we got. And you just kind of have to do it on the back end and make sure that the reporting is done correctly. And the best way to do that, in my opinion, is making sure you understand. And the way you do that is by asking lots of questions. Don't ever assume when a client or a business owner has multiple business units and things are going in and out of things. You can't really make the assumption like, oh, well, it came out of business unit A, it must be for business unit A. No, it's possible that maybe business unit D didn't have the cash on hand, so they needed to flow through it for company A. And so we need to ask those questions and really understand the business so that we can do that. And that's what I've been able to do with this client is by asking more questions and making sure I understand fully their intent and how things are going, I'm able to classify things correctly on the right books. And if we have to do intercompany transactions, then we're also accounting for those and recording those accordingly so that we get a better accurate on the individual level of the business units and then also the consolidated.
Perfect. Is there any last minute piece of advice that you'd like to share with anyone?
What I just want to kind of reiterate what I said. Make sure to help as a CFO to help the business owner understand why we need to keep things separate. A lot of times there might be legal issues. There might be also just for reporting. In order to make a best decision for the individual units, we need to know them individually and then on the consolidated. I keep saying it, but it's very important because we can't keep CFOs can't advise the client to make the best decisions if we don't know what's truly happening and have an accurate picture of what's happening on every single level. So make sure we ask the questions, we understand what their intent is, and then account for it accordingly, and then we can advise accordingly as well.
Perfect. Jared, as always, thank you. You're an amazing person, and I know that you're handling these companies and handling them well. If anyone out there needs help, if you are involved with a business that has different verticals, different companies, and you're needing to do consolidation, or you need help with cash flow projections, let us know. People like Jared would be more than happy to work with you, to help you, to be able to meet these challenges. My name is Keith Halls, and I'd like to thank you again for joining our call today, and we look forward to seeing you again next week. Thank you for